Hey, greetings, traders. Samantha LaDuc, founder of LaDucTrading.com, and want to remind you that I have a new Substack product out, Macro to Micro by Samantha LaDuc. It posts my occasional themes from chase, swing, and trend time frame. I also have market thoughts that are much more wide-ranging, from macro to quant, intermarket to technical. Videos very much are just captures of either trading room or webinars, but very, very condensed synopsis of where I'm seeing particular stocks, sectors, or markets headed. Also a new feature called Trade of the Week, which is a fabulously fun new endeavor where three ladies on my trading desk and myself basically pick one stock for the trading week. And then we summarize where we see it going and why and how to trade it with options. So just want to invite you to sign up for this newest free Substack offering. And then, of course, anytime you want to come into my live trading room, we can talk chase, swing, trend, timeframes for anything of interest to you, as well as what I'm seeing and posting for clients in their respective chase, swing, trend portfolios that I make available. So this is one that I just recently did write up and post today, and this is on BTU. So BTU is Peabody, for those who may not be familiar, and it may not seem very sexy because it's not AI tech related, but it is a very, very viable trend trade. So I just wanted to update clients. I sent this actually to them a few weeks ago and just put it on Substack today. So just to kind of reemphasize that I'm a macro to micro analyst, educator, and trader. So I'm looking at all asset classes across all time frames. BTU is what I would classify as a set it and forget it stock. And let me kind of show you why I think it is still of interest and might be starting to get a little bit more interesting. So let's begin with this write-up. Chasing momentum on an intraday or multi-day basis is a lot of fun, and why I run a live trading room. Anticipating volatility and rotation into a stock, sector, or index that lasts multiple weeks is my bread and butter swing trading. But there is something to be said about set it and forget it trend investing. Peabody Energy, BTU is a ticker symbol, definitely falls into this category. And because I follow it closely, it can be a chase and even a swing trade, all the while it is in my trend long only portfolio for clients since May 2021 at $5.31. So that's a 376% cumulative gain since. Case in point, though, on this kind of tighter time range, about a month ago, BTU finally formed a very bullish engulfing bar, which is this candle right here. And this is on a weekly time frame, which I use for trend trading. It finally formed this very bullish engulfing bar on its weekly chart, on a trend line, and started to break up higher, which was very exciting, out of its kind of long-held consolidation pattern. Then on January 18th, I happened to catch live in my live trading room that Peabody Energy will be included in the S&P Small Cap 600 Index. Peabody will replace Elf Beauty in that S&P Small Cap 600. I had literally posted right then and there in our client Slack workspace, quote, "This is a low risk entry chase above $24.62. It can also be a swing for those who want to play the breakout once it can get and stay above $26.30. The idea to add as a swing long, even though I already had it as a trend, was that this could be a potential for energy, forgive the pun, to push it up and out of that weekly resistance at $27.28. Nope, that's exactly where it got repelled just before earnings. Literally, it made it right here, and then it came back down. Anyway, that's exactly where it got repelled, right after earnings last week. I'm recording this on February 11th, right before Super Bowl Sunday. So the question is, okay, it got pushed back down. What's up? Do fundamentals even matter? Let's take a look, because it's actually a strong stock. As I've often discussed with clients, and this is literally over the past year, BTU has worked off its very large debt stack the last 2+ years and is quite profitable. But for some reason, it just couldn't rise up with its peers. A core thesis of mine last year, when I added another coal play by the name of CEIX in May, because the sector looked ripe for a run into the end of 2023. Let me just kind of show you what I mean by that. Here is CEIX, and it was May of last year, and it looked like the coal space was going to move higher into the end of the year. It, by the way, absolutely did. There were lots of other plays within coal that did pretty well. HCC was another one. You can see this nice big breakout. Okay, so it clearly was the case where BTU underperformed its peers last year, just did not produce the same run-up. And even this CEIX position, which I also recommended in our trend long portfolio at 59.38, doubled. It doubled off the June 2023 bottom. So it was very quick. So what is wrong with Peabody, besides the fact it's not an AI beneficiary? From a fundamental take, one key factor behind BTU's underperformance is its exposure to thermal coal rather than metallurgical coal, which has been less favorable in recent years. That and issues around corporate governance, which may have prompted a big investor to exit. Elliott Management had a 10% stake in the company, but it's down to about 11 million shares. But otherwise, the financial picture and future guidance for BTU look pretty good. A follower that I recommend, the Coal Trader at Dyer 440, basically summarized as well the same sentiment. The price spreads between high quality coking coal relative to lower quality coking coals are here to stay. In the years to come, producers with higher quality coking coal production will enjoy superior profit margins compared to lower quality portfolios. Centurion, which by the way happens to be a Peabody asset, will help accomplish this for Peabody. Another coal bull sums up very nicely the financial picture for Peabody. BTU reported $724 million of free cash flow on an enterprise value of $2.8 billion. That's a 26% return on its enterprise value. Not bad for a company sitting on a massive net cash position, equivalent to 20% of its market cap. LaShrub is his name, and he's very funny, by the way, if you follow him on Twitter at AGNOSTOXX, agnostox. Anyway, he has a Substack as well, worth following, and he posted, Peabody boasts a $3 billion market capitalization with $1 billion in net cash and generates an impressive $1 billion in EBITDA, making it a cash-generating machine. And then there is Peabody's new $325 million revolver that could provide additional capital for potential buybacks, which could be a positive catalyst for the stock. So the above reasons are why BTU doesn't fall in price, but also potentially why BTU likely hasn't risen. That index inclusion I mentioned above acted as a liquidity event, allowing Elliott to sell into. So what's the trade? For now, I'm not buying this potentially false narrative that BTU is done going up on China slowdown risks, but see this pullback as further support. It's digesting Elliott, as commodities in general get ignored on falling inflation expectations, while big money and small chase the FOMO of AI-focused tech. That's just the market we're in. Since it was already recommended in May 2021 at $5.31, I see no reason to unload it. Actually, it's doing exactly what I want in a set it and forget it holding that represents present and future value. It continues to be a strong hold. I will recommend adding once it gets and stays above 27.28 on a weekly close. Let me know what you think about this video. Include your comments below or write them up on my Substack at SamanthaLaDuc.com. Thank you very much for listening to my bullish case on Peabody, and I invite you to join me every trading day, either for my live trading room or my portfolios and all of my macro to micro analysis, education, and trades.
Subscribe to LaDuc Trading YouTube channel for more Substack videos and other content